Hello everyone, Andrew here with a new YouTube video. In this one we're gonna continue our series of simple concepts that I use while trading, and in this specific YouTube videos we're gonna talk about imbalance, or how it's called, inefficiency. An imbalance is usually left in the market when there is a big move, whether it's bullish or bearish, and what that means is that basically there were no particular, in this case because we're bullish, there were no particular sellers in a certain area, so there are only buyers in that market. And what the bank's algorithm wants to do and needs to do is to come back to those areas and fill them with sell orders before continuing higher, and that is why it's called an imbalance. It's an imbalance of orders, so there's only buy orders, there's no sell orders in a specific area. So because it's an imbalance, then price usually comes back to fill it in order to balance the areas with sell orders as well. So that's a good indication for us when selecting a good order block or POI to trade from. The imbalance or inefficiency, it can be found on any time frame, all the way from 4 hour down to the 1 minute, the seconds even. I usually just mark it on the 50 minute and down, 5 minute or 1 minute, because the same as a POI and an order block, you can really refine it down and see the specific area that needs to be filled. So let's take a look at the 50 minute, and we have a perfect example right here of an imbalance. So you see this big bullish candle that moved really fast. You can see how from this area to this area there were only buy orders. You don't see any wick down or anything like that. Just price pushed high and then created an imbalance. The way you mark imbalance is by taking the previous week and the week after the candle, so from the next candle basically. So this is the week before, like before the candle, and this is the week after the candle, because we take the weeks because here there were sell orders, here there were sell orders, but in this area there are only buy orders, so price is inefficient. There's an imbalance right there. So what did price do? It came down exactly to this area to fill it, you see, with sell orders before starting to push higher. If we take a look on the left side, we have another example right here. Let me mark it up better like this. Okay, so you see the green area, it's an imbalance because price moved really fast to the downside, leaving no buy orders in that area, the week and the next week, and that area was only sells, so it's an imbalance, it's an inefficiency in price. So what price does, comes back, fill it with buy orders before maybe continuing to the other side or just going up. Okay, let's find another example right here. You see this move, this bullish candle right here, which was really impulsive, leaving an imbalance behind from this week, previous week to the next week. And if you drag it to the right side, you can see how price first infilled some of the imbalance here, leaving just this area of inefficient pricing, and then price came back to fill that area and touching this POI as well before having a reaction. So this is a perfect example of what I'm gonna show you. It's when we're combining imbalance with a POI. So here we had a really valid order block on the 50 minute. You can see the doji, which is really nice. So if we mark that down, you see how it's really nice, like it came, it gave a nice reaction. Even if it didn't go bullish, it just gave a nice reaction. So if we have imbalance just before the POI, just above it or below it, that's just an additional confluence that our POI is gonna hold. Why? Because the price had a big move, leaving an order block and also leaving imbalance behind. So that really shows that price wants to come back, fill it, and then probably continue. Now, if we drop down on a 1 minute in order to refine it more, you can see a lot of imbalances left in the market. Even here on the bearish move that just happened, you see the imbalance being formed right here. That price came to feel a bit of it and then had another reaction to the downside. Even here you see this bearish big candle, you see how it left an imbalance between these areas where no buy orders were in. If we mark it like that, you can see how price came into the imbalance, fill it, and then continue down. So when do we actually use imbalance or inefficiency? I like to use it when I have, like, this is a perfect example of it. I have this order block right here that price may come to. It's a really good order block, but I also have a big imbalance just below it. So price usually, especially when it's during a session, price doesn't go all the way up to the order block in order to fill it and then give a nice reaction to go down. Usually it just stops at the imbalance below or above the POI, gives a nice reaction, then continuing down. It's good to know where an imbalance is in the market just for that. Like, look at this also. You see this small imbalance right here. Price came into it, tapped it, and then gave a nice reaction again. So it's really nice to mark imbalances and use them when actually trading and selecting a POI. Even here, like, look at this. This is a perfect order block, right? You see how it never was touched, like price just missed it by a pip or two. So how can you actually cash the trade? Well, it's really simple. You see the big bearish move here that caused the break of structure here. So price took liquidity from here, created an order block, then broke structure to the downside. So it created that nice order block, but also it created this nice inefficiency or imbalance. So if we actually mark that imbalance and not the order block, you see how price came exactly into it, fill it, and then started going down really hard. So that's why you need to know this concept as well in order to catch these nice entries. So the way I look at it is, if I have an order block like this, like that's really clear, and I have an imbalance also, I usually just mark the imbalance or the whole like imbalance plus the candle and see where price reacts from. But in this case, like the imbalance was perfect, and then you can wait for confirmations right there in order to take a short position. Also, if you're taking a trade from an imbalance with an order block just above it or below it, usually what I like to do is, so let's say we enter here, I like to cover that high. So if I have this order block right here, I usually like to cover the high also. I don't like to enter like this because the imbalance is just like the last resort to take an entry. Usually you want the price to touch your POI or order block before taking the entry. So that's why I usually just cover the order block as well, just in case price wants to spike up into the order block, give confirmation here and then drop down. So that way I'm not stopped out. I just have a slightly larger stop loss, which is perfectly fine. My risk here is not going to be that big, but still like a 1 to 5 is perfect to take as an entry. So that's why I'm usually, when I'm going to find a trade, I go down from the 15 minute all the way to 1 minute for the imbalances, just to really refine them and see how price wants to react. So let me find another example. Here, not really. Here we did have an order block. So let's see if we have this area. So let's drop down on the 1 minute to see if we have any kind of imbalance where price could have reacted from. Don't really have any imbalance in this area. You can see like the area was just an imbalance which you can mark, but because the POI was so big, like price could have been inside there really easy. So that's why I don't really mark it on the 50 minute. Usually I just mark it on the 1 minute when I'm looking for an entry. So let's say I have a higher time frame POI, like a 50 minute, 30 minute, 1 hour, 4 hour, and then price comes in, and then I start seeing like 1 minute order flow switching. I see the change of character right at the retest, because usually after the change of character you have another order block forming here, and usually before that break change of character right there, you usually have a big move, so you're also being left with an imbalance right there. So that's when I actually mark the order block and the imbalance as well and take the entry. Depends, if I see reaction in the imbalance, I just enter the imbalance, the stop loss covering the order block. If not, I'm just waiting. It's just an additional confidence even for your order block. So if you're waiting for price to touch your order block, you see an imbalance before, then you know that's probably a good POI where price can come and take an entry. So if you watched all the videos until this point, then you probably have the basic understanding of the concepts that we use in smart money trading. So we have supply and demand, we have how to find ICs or order blocks or sponsor candles, we also have the break of structure and the change of character, the explanation, and now we also have inefficiency to add to our trade. So the way we look at it is just finding, let me break down actually, I think this trade, yeah, this trade I took it on 1st of August. So this area is a trade that I took. So let me just break it down really quick. Also, I do post a lot of breakdowns, so if you watch these videos, then you'll probably understand how I took those. So let's say we have this demand area right here, okay? Have that demand area right there. So if you drop down on time frames, because I always like to go all the way down to the 1 minute in order to refine my actual order block, I just refine it to these wicks right here. In this particular case, we didn't really have an imbalance, but we did have liquidity. So this is the next video in this quick series, and I think it's gonna be the last one, where we're actually talking about liquidity. So we need liquidity before our POI. So we either have an imbalance or a liquidity point before our POI order block, sponsor candle, IC, however you want to call it. We need to have liquidity or imbalance. In this case, we had liquidity. So that's why price took liquidity, then made the change of character right there. So it's like really basic trade, really nice trade. And what did price do? Price came back to retest. So the way I look at it, sorry for that, the way I look at it is I like to find the last, in this case, demand that caused the change of character. In this case, it was that wick right there. We also had this right here, which didn't really get respected because, again, didn't have any imbalance or liquidity. Price came here, made another change of character, and on the retest, that's a perfect entry right there. Stop loss covering that low also, just be safe. Don't go for 1 pip stop losses, not worth it, just extend your stop loss so you can be covered and just take the trade. And that was a quick 1 to 10, 30 pips in like 5 minutes, price just build up. And now look at this here. You see this little imbalance right there. So we had a bigger imbalance right here, and then we had the little small imbalance right there. We didn't have any POI in this area. So this is another good example of when to actually look for an imbalance. So because we didn't really have a POI there, price, and this was news. So right here, let me disable this really quick so you can see it. This was news, but that's just a perfect example because this is what usually happens during news. During news, price just comes into a nice refined imbalance or POI, and then price just reacts. That was a good one because we had a break of structure right here, and that was the only point before the break of structure. So usually when I have a change of character or a break of structure, like right there, I like to look at what's the last order block or imbalance that caused that break of structure. So in this case, it was this imbalance that caused this big move to create that break of structure. So price usually returns to that area right there. And we also had the extreme, which was like this POI right there, but price didn't really come back all the way there. So this is why I like this stuff right here. So if you wait for that, like you can't always, of course, you can't really predict where price is going to come, but if you have it marked and then just go drop on the 5 second, let me go back to that specific. Okay, so let's see. And if you drop down the 5 second, okay, you can't really catch this. See how exact that was. I mean, you can catch it when retracing down, I think. So right there, you can catch it because you watch the 5 second, you see order flow switching. This is like advanced concept that we teach. You see price shifting on the 5 second and you just execute around here, and then that's basically the trade. So that's how you can catch it really nice. But yeah, the point of this video was to show you how good the imbalance is while trading and why you should also implement it into your trading, combining everything that you learn from my free videos. I hope it has helped you. In the next video, we're gonna talk about liquidity, what is liquidity, where can we spot liquidity, and why we actually need liquidity in order to take a trade. That's gonna be an interesting subject. It's probably gonna take a while to talk about it because it's a thing that I'm really passionate about. Understanding where liquidity lies in the market is the key to success, actually. Like from what I noticed during my last years of trading, if you know where liquidity is for targets and for entries, you're basically set for life. You can take entries really easy if you just know where liquidity is lying and when does price want to take the liquidity out and then go for the next liquidity. So that's gonna be an interesting subject. So thanks for watching, guys. If you want to join our mentorship, we just opened access like a few days ago. You can join by going to fxatrading.com. I'm gonna leave the link in the description box. See all the features that we offer, see some reviews of our students, and if you're interested, you can join us, learn how to trade the proper way, just like smart money, dumb traders. We actually teach you how liquidity works, how the smaller time frame works, how you can take entries on a 5 second, everything like that, how you can have all the confirmation needed. Also, don't forget to subscribe, like, and leave a comment. Also follow me on Instagram. And by the way, if you have any questions, you can freely ask me. I reply to all my DMs. Thanks again for watching and have an amazing week.